Hello and welcome to this session. This is Farhat, in which we would look at performance requirement for a preparation engagement. Now, in the prior session, we looked at the introduction to a preparation engagement, and specifically, we stated that the first thing we need to do is establish an understanding with the client through an engagement letter where we spell out what is a preparation, what's our responsibility as accountant, what's your responsibility, and any limitation. In this session, we're going to dive a little bit deeper into performance requirement, into documentation, into what needs to be done if we are using some sort of a special purpose framework, so on and so forth. So in a preparation engagement, there are several performance requirements that the accountant must meet to ensure that the financial statements are prepared in accordance with the applicable standard. So there are certain things we have to know before we perform a preparation engagement according to some applicable standard. What do you think the first thing we need to do is knowledge of that applicable standard? So we have to have some sort of a knowledge and understanding of the whatever the standard is, and we have to understand the company itself. If you want to prepare the financial statement, do you understand the company? And we are using a measurement tool, and the measurement tool is the standard for using GAAP. Do you understand GAAP related to that company? So one of the fundamental requirements is to make sure the accountant gain a solid understanding of the financial reporting framework that the entity intend to use for the preparation of the financial statement. What are we looking at? What's the framework? GAAP or IFRS, but again, in our situation, US GAAP. So if you're preparing financial statements according to GAAP, do you understand GAAP? Do you understand the company? We'll start with this and we'll dive a little bit more deeper into the preparation engagement. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
Do you have to have any prerequisite knowledge before you start an engagement, preparation engagement? And the answer is no, it's not required to have prior experience or prior knowledge in the entity-specific industry or the framework. However, you need to acquire the necessary knowledge in order to complete the work according to the chosen financial reporting framework. Now, how would you learn about it? You will take, courses, you hire a consultant, you talk to someone, you'd hire maybe another company to help you. This includes knowing the significant accounting policies and how they apply to the entity-specific financial situation. So it's the accountant responsibility to make sure they have the required level of understanding. They may not be familiar with the industry, that's fine, but it's your responsibility to do so. You can do research, consultation, industry expert, professional development to be well prepared to accurately prepare the financial statements. For example, you could be an accountant, that always work with retail industry, and suddenly you are hired by a tech startup to prepare their financial statements under GAAP. But all your experience in the retail industry, you may not be familiar with specific accounting policies like what? Like software sales. How do you recognize revenue for software sales? Well, you need to study the relevant GAAP guidance or consult with the industry professional so you know how to read, how to report this information. So that's what we mean by you don't have to have the knowledge, but you have to acquire the knowledge in order to complete the engagement. Now, when we're looking to prepare the financial statements, the accountant role is to basically prepare them based on record provided. So based on the record, documents, and other information provided, we'll take this information provided to us and we prepare the financial statements. This involves organizing, presenting the financial statement or data into a format that complies with GAAP, with the reporting framework. Now, if the accountant is involved in helping management make any significant estimate or judgment or any disclosure, the accountant must make sure that these judgments are discussed with management. It's not only discussed with management, and management is accepting full responsibility of these decisions. So you cannot be the accountant of the company. If you help them, they ask you, you can tell them, but at the end of the day, it's their responsibility. These steps help to clarify the division of responsibility between the accountant and management. Management is responsible. Yes, we were involved because they don't know what they're doing. For example, they don't know how to book depreciation, how to estimate the life of an asset. Okay, we showed them how to do it. But they accepted it and they took full responsibility for the financial statement. The accountant is not obligated to include their name or the name of the firm on the prepared financial statement. Bear in mind, though, a disclaimer statement must appear on each page. It can be worded in various formats that no assurance is provided. So basically, on every page, I'll put no assurance. No assurance is provided on these statements, or these financial statements have not been subjected to an audit, review, or a compilation engagement, and no assurance is provided. Now, if this is too big, well, we're going to find a solution for that. If the accountants are unable to include the disclaimer on each page, they must take one of the following action. Issue a disclaimer. You must formally issue a disclaimer making it clear that no assurance is provided. What's issue a disclaimer? Just a quick few sentences report that we are not, we are not providing any assurance. Or if you can't do that, then you perform a compilation engagement. If the accountant wishes to provide some level of assurance beyond the preparation, again, even in compilation there is no assurance, but you can issue a report. They could opt to perform a compilation engagement, which could involve a little bit more procedures and provide a higher level involvement, not assurance. Compilation, no assurance, still no assurance, but more of an involvement. Or now, if you think you're not comfortable, you cannot fulfill your requirement, you should withdraw from the engagement and inform management why you are doing so. So, what is a disclaimer? This is what a disclaimer looks like. The accompanying financial statement of Farhat lectures were not subject to an audit, review, compilation. Therefore, we don't provide any sort of an assurance on them. That's good enough. How about if the financial statements are following special purpose framework? Other than, special means other than what? Other than US GAAP in the US, like a regulatory framework, tax reporting, other comprehensive framework, cash basis. Well, we must include then a description in the financial reporting framework used. For example, if we're using cash, we explain revenue is recorded when cash is received, expenses is recorded when cash is paid. And this description should be either placed on the face of the financial statements or disclosed in the accompanying note. The goal is to make what? Is to make clear to the users which financial reporting framework we're applying. As if we're applying special purpose, it's different than generally accepted accounting principle. How about if something is not accurate or incomplete in the financial statement? Do we have to verify anything? And the answer is no. We don't have to verify. We don't have to corroborate or review the information. Okay? We may choose to maybe ask some questions to ensure completeness and accuracy, but we don't have to do any of this. Now, if we discover that something obvious, that the provided information is inaccurate or incomplete or unsatisfactory, like they're telling us one number, and when we look at their general ledger, for example, they're telling us sales is 540,000. When we look at their general ledger for sales, there's only 200,000. Well, I'm not going to accept that. It's inaccurate. This could be we're looking at obvious errors. I'm not going to check if the 250 or the 450 is correct. They don't match. It just doesn't make any sense. They must take action to obtain more accurate or complete information. You'll tell them, look, which one is correct? Just tell me which one. If the accountant prepares the financial statement and discovers that it contains a known departure from the applicable reporting framework, well, let's assume now they're using special purpose framework, and now it's a departure. Disclose the departure. Disclose the material misstatement. The accountant should disclose, highlighting any departure from the reporting framework. Or if you're not comfortable, it's like it's way off, the misstatement is significant and cannot be resolved, you withdraw. Because again, at the end of the day, you don't want to be associated with misstated financial statement, fraudulent, misrepresented financial statement. And just you tell them, I can't do that. I can't do that. Why? Because you want to ensure that the users are aware of any departure from the standard and use professional judgment to assess whether the financial statement remain useful and accurate. You have to do that. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following situation prevent an accountant from preparing financial statement that exclude most disclosure required by selected financial reporting framework? So under what circumstances we cannot exclude the disclosure? Okay, 1A. The entity's management has instructed the accountant to exclude the accountant name from each page of the financial statement. Can we exclude that? Yes, that's perfectly fine. Yeah, that's fine. We can prepare and we don't have to put our name. That's fine. The entity's management has authorized the accountant to disclose the emission in the financial statement. Yes, when we don't have it, we have to disclose the emission. And the entity told us to do so. Yeah, it's a good idea to do so. That's fine too. The accountant lacks independence. It does not matter. If this is a preparation, independence is not an issue. So by process of elimination, D is the answer. The accountant discovered that the emission was made with the intention of misleading users of the financial statement. Wow, we can't do that. Now we cannot exclude the disclosure. If they insist on it, we withdraw. So if the emission is to mislead, it's not acceptable. If the emission is to save money, it's not needed. No one's asking for it, then that's fine. So emission is okay if it's because you want to save money. They don't want to pay you for the disclosure. But if it's to mislead, they're asking you not to disclose, because if you disclose, the users will find out something about our revenue recognition that's questionable, then we can't do that. So the answer is D. What should you do? You want to go to Farhat Lectures, look at additional resources, lectures, multiple choice. Whether you are an accounting student or a CPA exam candidate, the best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.